Why settle for just dividends when you could collect premiums too? Today, I'm sharing with you guys my 5 favorite dividend wheel strategy stocks for May. Yo, what's going on, premium chasers? I hope you are having a God blessed day today. Every single person that comments down below is going to get our quad option strategy playbook, which is going to show you in a lot more depth how to combine the power of dividend paying stocks with the quad option strategy and selling options. Guys, this is a fantastic strategy that I wish I knew sooner in my life. Just drop a comment down below and I'll send it to you personally. And while you're down there, what you doing? Hit the like button, hit the subscribe button. Let's get into it, guys. So it's all jokes aside, I'm going to show you guys a mixture of different kinds of dividend stocks that I like running the wheel strategy on, the quad option strategy on. But before we jump into those, I want to show you guys the Dividend Kings list. If you don't know what that is, it's basically a list of companies that have been able to increase and give their dividend for a ton of years. So all of these are going to be over 50 years, I believe the Dividend Kings are, the Dividend Scouts. I don't know. One of you guys is going to go crazy down below because I don't know that exactly off the top of my head. But this is a great starting point. That's why I want to share with this. This is from Simply Safe Dividends. I don't know who that source is at all. So if they sell some other product, this is not an endorsement by any stretch of the imagination. But I saw this list and I really like it because it breaks it down by sector for us. So maybe there's some in here like the Tootsie. Look, I know you like your Tootsie Rolls. All right. So you didn't even know that that's a Dividend King. You probably had no idea. Right. So, but all jokes aside, this is a great list to get you some ideas on companies that you believe long term, because that's the key to investing, guys. If you ain't long term, you shouldn't be selling options. You shouldn't be buying the stock for the dividend either. But let's get right into it, guys, with our, let's get the most controversial one out of the way that I'm paying attention to, that, and that is FIZZ. Okay. Say what you will, I'm in here for one reason only, guys, and that is to make money. Okay, that is what I do in the stock market. That is what I'm looking at in the stock market. Okay, and I was fortunate enough. FIZZ was a very good play for me in what time. So all jokes aside, I am watching FIZZ. We are at pretty low levels here for FIZZ, and it is interesting to me because I really like the dividend that they offer, and the premiums are pretty good on FIZZ as well. Okay, so I'm going to go over to the trade options, selling a put, and I want to just take a look at what kind of premiums we're actually seeing here on FIZZ. So I like to go about 36 days out. Obviously, this is more of a cheaper stock right here. I'm just going to look at these 21s right here. You can see we're collecting a $33 in premium. Obviously, guys, educational only. These premiums are constantly changing with market conditions. All right, so I'm going to toss this into our cash secure put calculator. All these calculators are free for you to download in our Facebook group. The link will be down below in the description. Join us. It is a vibe. There is so much conversations in there, guys. I'm sorry I can't get back to you. I still have a life I got to live, though. But it's a fun time in there, guys. 21. Share price, obviously our collateral is going to be 2,100. If you have no idea what that means, basically what we're doing here is we're selling a put in 36 days. What we're saying is, hey, in 100 days, I'm willing to buy 100 shares of FIZZ at $21. Now, your brokerage is going to require you to put up some collateral on margin, your cash in your account, and they're going to lock that up until that expiration, or if you close out your position early. But you could see we get about a 1.57% return on our collateral here. Is that good? Is that bad? I don't know. You got to figure that out for yourself. You obviously can do as many contracts as you want for this as well. But about a 1.57% return, in my opinion, isn't bad, especially if it's a stock that I do want to get assignment on and collect that dividend on. So I am watching FIZZ. Next one, right, guys, is going to be Coca-Cola, right? You guys know I'm a big fan of Coca-Cola and Pepsi. Coke doesn't have a massive dividend by any means, but it's still a company I like because it doesn't tie up a tremendous amount of capital like some of these other dividend paying stocks, right? Some of these Dividend Kings and Aristocrats, man, some of these are very expensive companies, right? So Coke is really just trading kind of sideways right here. Me personally, I want to wait to see if we kind of retract a little bit more. I doubt we're going to come back to these levels. I did speak about this a little bit more at the beginning of April, when it dropped down to these levels. So you can see we've been hanging around this upper portion of the Bollinger Bands. But if we cross into the below section, which I think we will. That's when I'm going to be taking a look and considering looking at the cash secured put. So let's go take a look at the KO right here and take a look what kind of options premiums we're able to collect. So we're going to go 36 days, and you can see they're decent, right? Like even if you did the 70s right here would be a 94. Let's take a look at what that delta is. Delta is only a 31, so only a 31% chance roughly of assignment collecting 94. So let's go see the 94 right here. Our collateral obviously is more. It's 70 times 100, so $7,000, right? But again, about a 1.34% return on a company that if you want to own, and then you were able to do covered calls on the other side of that if we get assigned of it, right? All right, let's spice things up because I know you really want to see it, right? We're going to go to Tootsie Roll, guys. I know you want to see it. Let's see. Tootsie Roll, ticker symbol TR, all right? This is, it's funny because I actually looked at this one like many, many years ago. I never messed with it at all, but it's funny how, so I was talking to one of you guys in my community recently, and it's funny how there's so many companies out there you would never think are publicly traded, and then you're like, what? Like, how is Tootsie Roll a publicly traded company? But obviously, no big setup here. I mean, maybe covered calls if you are actually in Tootsie Roll. I personally am not, but and this is not really on the official 5 list. I'm just being a little funny. Moving on to the next one here, guys, is Realty Income. You guys know, especially you guys in the community, I am a big fan of Realty Income. I've been an investor in Realty Income for many, many years, especially when I was a silly little dividend investor, right, where I thought I could make enough money to live off dividends. Listen, that is a pipe dream, all right? That is a pipe dream. So great dividend. Let's go take a look at the chart to see if there's any setups. Trading really just sideways, right? Sideways, right in the middle Bollinger Band areas. However, it is trading below its 200-day moving average, which to me, it's showing as a kind of resistance level, right? You can see we kind of hit it here and then retracted, right? So taking a look at Realty Income here, ticker symbol O, right? Let's go take a look at what premiums they are. Now, here's the thing, guys. When you're selling cash secured puts, right? If you like literally just want to get by the company, right? Like you're just a believer in it, like, and all, like, I say this with like obviously completely educational. There's really no bad time to do a cash secured puts. Now there's better times to do cash secured puts to maximize premium generation and maximize the best strike price you could potentially be assigned on. But if you like even if it's trading at the top Bollinger Band and you're like, dude, I just want to buy this stock, right? You can always just do a cash secured put for a weekly or something like that. There's nothing stopping you from doing that, all right? So taking a look at Realty right here, you could see premiums aren't that crazy for a company like this. Let's take a look at the 55s right here, which is really close to the money right here. $75 of premium collected here. Let's type that in. And what is it? 55s, did we say? So $5,500. So about, again, a 1.36% return on our money. Now, a lot of these dividend paying stocks are, they're a lot more boring, guys, but I need you guys to like just think a little bit more through it, right? Like, because we talk a lot about the Nvidias and all the other stuff here with selling options, but remember, guys, you want to be able to do this for a long period of time, and you're not accounting for the fact of assignment with these. With these dividend paying stocks, the strategy is to actually get assigned, right? It is, right? Even when you're not doing it with dividend paying stocks, in my opinion, right? Because once we get assigned, let's say a Realty Income, we can then do covered calls on it to collect premium, and we're collecting the dividend on that. So we're basically double dipping on it, right? That's why I love doing this on dividend paying stocks. Next one is Pepsi. I've been talking about this one basically every single video, I think. And I think this is still a fantastic company. Obviously, a lot more expensive, $131 a share. We have not seen these levels in an extremely long time. In the last 5 years, we have not seen it at 131. I think last time I looked, the last time we had these 130 levels was in like 2021 or so. So to me, it's a fantastic company. I am bullish on Pepsi. Let's go take a look at what kind of premiums we can get on our cash secured puts here, because we are towards the bottom Bollinger Band. It is a decent setup if you ask me, right? So even like the 130s, 125s, right? 125s are like, you're only getting 31 bucks. 126, look at the massive jump from there, right? Because it's just, the 125 is very unlikely for Pepsi, but you can see the premiums obviously are a lot higher. Let's take a look at the 130s right here. So we're collecting $2.99 $292 on that, and then $13,000 at your collateral, right? Times 100, obviously a lot bigger of a return. There's not as much positive sentiment right now with Pepsi, obviously having to change a whole bunch of their ingredients and stuff. So that's why we're seeing what we're seeing with Pepsi. And moving on to our last one is T Rowe, one of my absolute favorite quad option strategy stocks, guys. Fantastic dividend here. We have seen a really big rebound. However, this thing can move quick, man. Like this, dude. I've had a lot of sweat from this company over the years, but we are pretty below our 200-day moving average of 107. So in my opinion, still a decent setup if you really want to do cash secured puts, but we have seen a nice rebound basically in the last few weeks on T Rowe, guys. Don't forget, every single person, guys, is going to get down below our quad option strategy playbook. It's going to show you in a lot more depth how to combine these dividend paying stocks with the wheel strategy and the quad option strategies. Just drop a comment down below. Also, if you are somebody that's interested in a more hands-on approach with me, right, there is our 1-year-long incubator program. That link will be down below in the description of today's video. I believe it takes about a year to really master this strategy because, as you see, we really don't trade a lot. We trade a handful of times in the month with the quad option strategy. So if you're interested in learning more about that, make sure to head down below, and also make sure to join our Facebook group. All the calculators I showed you, all the training, all that stuff is completely free here on the channel, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.